Where does wealth created from new technology actually go? For example, when the Wright brothers invented the airplane, did they personally capture all of the wealth from their innovation? Did Delta or American Airlines? Who captured a majority of the new wealth from this new technology? Have you ever wondered the answer to this question? We see a similar story today as everyone rushes to invest in AI. Few realize that Bitcoin is actually the ultimate global AI index fund, capturing most of the wealth from any new technology advancements. To understand how, let's think about this from first principles using basic logic and reason. In fact, let's think about a theoretical new future technology breakthrough. Imagine a series of advancements in AI and robotics that fully automate strawberry farming and distribution, eliminating the need for human labor. Well, initially, strawberry farms leveraging this new technology would experience a dramatic drop in production costs, falling 99%, while still being able to sell strawberries at current market prices. This scenario would create temporary high profits, which in turn would attract substantial investment and interest in the strawberry industry. However, these high profits are unlikely to sustain on a long enough time horizon. As new entrants in the industry adopt the same technology, competition intensifies, driving down the selling price of strawberries for all. The market, moving towards efficiency, would see excess profits gradually erode towards zero. This means this technology made the strawberry industry magnitudes more productive and efficient, but the strawberry companies didn't capture much of this new wealth. The main beneficiaries of these technology advancements are not necessarily the producers or investors in these companies, but the consumers. In a world with a fixed money supply, prices must decrease as abundance increases, accurately reflecting the new technology, market efficiency, and reduced cost of production. In the context of strawberry farming and distribution breakthroughs, most people today would be holding and rebalancing equities or bonds in various competing strawberry companies, anticipating a share in the profit from these technology advancements. However, in a world with a finite money, the actual value accrual would favor savers of Bitcoin in the long run. As technology advancements in competitive markets drive real strawberry prices down by 99% and excess profits towards zero, the price of strawberries may fall from 100 sats to 1 sat. In other words, the relative value of Bitcoin per strawberry would increase by 100x. So where does this new wealth go if it doesn't accrue to Bitcoin? Even if the wealth was temporarily captured by another traditional asset, that asset too eventually erodes against a perfectly finite monetary asset. In the short run, the strawberry farm's equity and bonds may have offered a higher than expected return, but in the long run, most of the wealth did not accrue to the equity or bondholders. The wealth accrued to the consumer holding Bitcoin, the only asset that cannot be perpetually produced or devalued by natural free market forces. Like with any technology breakthrough, strawberry farm equities, bonds, real estate, and strawberries can be produced in greater quantities or devalued by competitive markets, so they should not be used as de facto savings accounts. Ultimately, magnitudes more wealth could end up in Bitcoin instead of these assets. You can still invest in these assets if you know what you're doing and you buy them at the right valuation, but because we have Bitcoin, you can also choose to just save. With this example, we can begin to see how the rapid acceleration of technology impacts our ability to save and how Bitcoin may be the asset that increasingly captures a significant share of total global wealth, all at a time when total global wealth is rapidly increasing due to the relentless acceleration of innovation. With this framing, the best way to think about Bitcoin is that it's a technology, AI, or productivity index fund, where the yield is lower prices year after year, the opposite of fiat money today. So in a world of abundance, hyperproductivity, and intensely competitive markets, storing significant wealth outside of Bitcoin will be increasingly difficult. Wealth created by new technology ultimately ends up in Bitcoin due to the natural free market forces of technology deflation. This makes simply holding Bitcoin the ultimate new passive index fund. Thanks for watching, everyone, and see you next time.